Welcome to our channel where we backtest and evaluate various Forex strategies based on their achieved results, and subsequently input them into a spreadsheet containing the overall ranking and profitability of all strategies. In this video, I have a very simple and profitable trading strategy for you, with the understanding that this strategy works best on the currency pair BTC-USDT. Essentially, we will primarily utilize a 5-minute chart for this strategy, and we will need the following indicators. Exponential moving average, which we will add twice. We will set the parameters for the first one with a length of 50 and also change the chart to a 15-minute time frame. Then we will slightly adjust the style for better visibility. Subsequently, we will set up the second exponential moving average with a length of 200 and also change the time frame to 15 minutes, followed by adjusting the style for better visibility as well. Last but not least, there is an indicator called Liquidation Levels by Leviathan. Be aware that there are several indicators. Select the one specifically named. The default settings of this indicator may appear somewhat chaotic, but we will adjust them as follows. Leave the initial settings unchanged. Turn off liquidation bubbles and turn on market order bubbles. Then turn off the following settings of this indicator. In this section of settings, we will change the color to better represent what will be done at that moment, as the original settings were the opposite. Set the value to 3 for both smaller size market orders and medium size market orders. Leave the other settings unchanged and confirm. The indicators are set, and now let's illustrate examples based on which trades will be entered. Firstly, we will explain the long position and subsequently the short position. For a long position, we must trade with the main trend. The EMA 200 must be below the EMA 50. We will monitor when the price falls below the EMA 50 level or even the EMA 200 level. Subsequently, we wait for the appearance of a green bubble, indicating an entry into our position. We can see that this green bubble has appeared multiple times, confirming our entry into the long position. We would enter somewhere around the first displayed bubble. When setting the stop loss, we look back slightly on the chart and determine our stop loss based on previous price movements. We see that the previous low was the lowest, so we set our trade boundary to approximately this value. For take profit, we also look at previous market movements and aim for the previous high. Based on this, we can see that this trade was successful. It's also important to note that for a long position, we target our take profit. But if a red bubble appears while we have an open position, it indicates a possible trend reversal, and we close the position when this red bubble appears. Another example of a long position is here. We see that the price moves in a way that crosses our EMA 50. Subsequently, we notice that the indicator with the green bubble signals an entry into a long position. The entry into the position would be at the first bubble. When setting the stop loss, we would consider the previous price action. Similarly, based on the previous high, we would determine our take profit. We could aim somewhere around here. However, before our open position reaches the take profit, a red bubble would appear, indicating the closure of the position and a possible trend reversal. So we close the position when a candlestick with a red bubble appears. If we hadn't entered the previous position, we would have entered the following one, which occurred shortly after. We would also set our stop loss and take profit approximately as we did for the previous position. However, we would also exit the trade when the red bubble appears. Right next to it is another potential entry into a position. The stop loss and take profit would be set similarly to the previous positions, but we would also exit the trade prematurely when the red bubble appears. Example of a short position is here. We see that the price action crosses our EMA 50 and subsequently our EMA 200. Subsequently, we notice that the indicator with the red bubble signals an entry into a short position. The entry into the position would be at the first bubble. When setting the stop loss, we would consider the previous price action. Similarly, based on the previous low, we would determine our take profit. However, before our open position reaches the take profit, a green bubble would appear, indicating the closure of the position and a possible trend reversal. So we close the position when a candlestick with a green bubble appears. That would be it for the entry criteria into positions. Now let's test this strategy 100 times and then evaluate its success, subsequently adding it to the spreadsheet. So we've completed the backtesting. Let's now take a look together at the achieved results of this strategy. So the results are as follows. Out of 100 tested trades, the calculation turned out as follows. We had an average risk-to-reward ratio of 0.95% risk to 0.63% reward, which was not an entirely ideal outcome. It took a total of 48 days, and in this test, there were a total of 66 successful trades and 34 losses. Therefore, the success rate of this strategy can be considered relatively high with its 66% win rate, but it is largely due to the small risk-to-reward ratio. As for winning streaks, we had the most 5 wins in a row, and conversely, we had a total of the most 4 losses in a row. When calculating the percentage increase of the account relative to the 0.95% risk with a 0.63% reward ratio, in the case that the trade was successful, we were able to achieve only a 9.28% gain on the account using this strategy in just 48 days. This translates to the following in terms of trading accounts. So we are now in our spreadsheet where we will be adding individual strategies that we will test and rank according to their gain on the account. Our today's strategy currently ranks second out of the strategies tested so far. Over time, we will try to test and add more videos, but it will mainly depend on whether you enjoy such content. The next video will be testing a scalping strategy, which also boasts incredible success. So don't forget to stay tuned so you don't miss the next video or any others. If you enjoyed today's video, don't forget to give it a like, and remember to leave me a comment letting me know if you like this strategy or suggesting another one for us to test in the future. Also, hit the subscribe button so you don't miss any of our tested strategies that we will be evaluating in the future.